It's just a complicated tax situation in Ohio amongst other states.
They came out and finally said there's not going to be a new W-2 form for this year, but there will be for 26.
And right now we understand that the voluntary tips are eligible for this tax treatment and not the automatic tips.
That is we believe in total compensation statements. I mean, Tyler's preaches it. So it's something that we want to see as an automatic to any of our customers. Mm-hmm. Every one of those employees should see an annual compensation statement so that they understand that they can see their PTO, they can see what the taxes are being paid and so forth. And of course, the sweeter that benefit package, then the greater that picture.
Hey everybody, welcome back to another episode of the Next Gen Strategies podcast. You maybe notice we are not in our normal setup today because we are on the road and super excited to have a couple of guests today from our friends at HR Butler, Tyler and Trent. Welcome to the show, guys.
Thank you. Thanks for having us.
Yes, thank you.
We are going to be diving into all types of different things. And Tyler and I have been really excited for this episode because there's a lot that happens in the world of human resources and payroll and taxes. And, a lot of times, Tyler from the CPA side is getting a lot of questions on things. And so we said, we should really have a dedicated episode where we're bringing in some experts to talk about some of the hot button issues that, may be arising and maybe get some advice as we go along the way. And we're going to have some fun while we're doing it too. So thanks guys. Welcome to the show. And, Tyler, we're going to dive in. Let's just get it going. So, first off, let's hear a little bit about who's HR Butler.
Well, go for it.
Yep. Yeah, absolutely. I guess in the simplest form, we work in three main verticals. We are a full service payroll company. We work with the employee benefits, so the health insurance, dental, vision, disability for our employers, and we work on the HR services side. We're a local organization working with our clients here primarily in the Central Ohio area, but have expanded our footprint to all over Ohio itself and really almost all 50 states. So our organization has been around for 43 years now, if I'm not mistaken. Myself, I've been with the organization going on 19 years now.
Yeah. And you guys have been growing a lot recently. We're in a little bit different spot than where we were before.
We are, yes. We've recently, in the last year, have relocated here to this new building. I'll let Tyler tell you maybe a little bit more about that.
Yeah, no, it was an interesting opportunity that came up. So we had kind of planned a 3-year plan to get moving and everything. And we left a strategy meeting talking about where the business was going, what was happening. And someone looked at me and goes, "Where are we going to work? If that happens, we're going to be out of space faster than what you're thinking here." And I just took a real hard, long look, walked around the building for a day and was like, she's right.
Yeah.
So kind of went behind the scenes and started looking at properties, doing things, just seeing what's out there, just saying, okay, we probably need to make this move in 12 to 24 months instead. Mm-hmm. And with a matter of a few months after looking at some properties, we had nailed down an ideal location, one that wasn't on the market. Something came back to us and just it made a lot of sense. So we decided to get pretty aggressive, make a move. And in the process, we decided to wipe the slate clean on everything, furniture-wise, everything as a whole. So it was really kind of a 6-month sprint of, hold on, we're going to go from not just moving, but all new everything, moving the whole organization. Now, the one thing we said was we can't move during year end.
Mm-hmm.
Well, so what ended up happening was we moved on the day of our Christmas party during December.
The year end.
But now we're here in this awesome office. Just you guys have plenty of room to grow now. And, we'll talk about some areas that you are growing into, but, so excited to touch on a couple different things today. And Tyler, let's kind of jump into the first topic because I think this is one we've talked about a little bit on a couple of different episodes, and I think it'd be good to get into it.
Well, I always like to lead with, what do you guys call the one big beautiful bill? It's like, is it OBBA, BBBA, BB? It's like there's no it's like the previous tax change, we called it the TCJA. Like it kind of rolled off the tongue, but I don't know what to call this yet. I don't know if you guys have got that you figured out yet or not.
I've kind of defaulted just to BBB. Yeah, aligns with Better Business Bureau and everything too. Yeah, so it just makes sense. But we all kind of inherently call it a little bit different as we're talking. So I completely agree. I wish there was one just easy acronym always or something.
Yeah, absolutely. So I think we were just talking off recording about, we had a clip that did well when we started talking about the idea behind the big beautiful bill was to try to do this no tax on overtime and no tax on tips, and it's materialized now into an actual bill that passed. And it also has, its own special requirements. It's not as obvious and easy as just saying no one's getting taxed on any of these items. So I thought it'd be a really good topic to talk about with you guys, because, when we kicked off our last episode talking about it, I said, hey, the payroll processors and whoever's cutting W-2s are going to have a process in the background that essentially disclose what the overtime income that's eligible for this program, what tips are eligible. So the taxpayers and your employees will have that presented on their W-2. So what do you guys know of anything that's maybe developed or is getting developed in that area?
Yeah, absolutely. So, the biggest thing that first came out was, okay, everyone's rushing to, what do we need to do this year? Yeah. And they came out and finally said there's not going to be a new W-2 form for this year, but there will be for 26. And they've started to release what those fields are going to be and all that sort of information. Now, they did come out, though, for 25 with the overtime piece, that the halftime premium needs to be reported in box 14. Okay. So not really actually going to get reported to the IRS per se, but more so in an informational standpoint, just saying, hey, here's what the amount of overtime premium was. The other big thing with that a lot of people need to realize is that with double time, triple time, some of those special scenarios that some organizations do, it's everything over the straight time that accounts for it. So it's not just half time of the time and a half. It's if you get paid double time, it's that whole extra premium portion. So, employers need to start looking at how are we reporting this on payroll. Most organizations are pretty easy already because they're already tracking all that data. But then taking that data and now pulling it off into where it goes in the W-2 and all those different locations is going to be critical.
So are you seeing the need in 2025 to do some level of manual tracking of that, or are the payroll software, or even something that you guys utilize, trying to get to where it's automating that process of tracking that premium?
Yeah, so right now we're already tracking that premium for most employers. Okay. Now, the employers that need to look at this are the ones that are maybe either doing homegrown systems more, or where are they tracking the time data? Because a lot of our employers that we're not doing the time tracking data for, we're relying upon their system tell us what earning codes to use. And that's true with any payroll company out there that, unless you're doing the actual time tracking, you're just an input really at the end of the day. So what's that data coming over like? How are we identifying that? Just because we've seen employers out there that are even just paying out the total dollars at the end of the day. So they're not separating it. But most commonly, your mid-sized organizations, your organizations that are doing proper time tracking systems are separating that data already. So that's fantastic.
Have you seen that your customers and your clients, their HR or their leadership, getting a lot of questions from employees surrounding these two items?
Yes. Yeah. And it really jumped the second this got approved.
Yeah.
And now it's simmered off a lot.
Okay. And it probably will come back up again once they get their W-2s and they do their tax returns. Oh, what is this? So as of now, the employees should expect to see something in their box 14 for their overtime premium. And I'm glad you hit on, hey, this is just the if you're getting time and a half, it's the extra half rate. Double time, it's the double component of it. And the other thing people don't forget is that this doesn't exclude overtime from FICA taxes as well. This is strictly income tax at that premium. Now, is there something similar happening with the tips as well?
Yes. And actually a couple more things on the overtime piece that you started to hit on there was that I kind of glossed over that. Yes, it's only certain pieces. And how's it actually taken into account when payroll's running? That's the big misconception that came out right out of the gate, was that people think that it's going to lower their taxable wages on payroll. It doesn't. It's a tax credit when you go to file your taxes at the end of the year.
So that was going to be my follow-up question. Did you think that there's going to be any push to update the W-4s, which if you don't know what a W-4 is, it's the paperwork your employees fill out to tell you how much to withhold taxes. Do you suspect any change in that area?
I imagine there's got to be something eventually, but the hard part is it doesn't apply to every employer.
Yeah.
I mean, it's at the end of the day also included in some of this reporting, especially for the tip size, is going to be, or side of it, is going to be the industry these groups are in. So I don't know yet if it's really going to end up updating W-4s.
Yeah, some of the companies I work with, I've suggested as they've gotten questions for folks is to try to highly encourage employees not to adjust their withholdings, because the other thing too is this is a temporary provision and it's not permanent. So you make a bunch of adjustments to your W-4s and then it kicks off and you don't realize that now you owe when you didn't expect to owe. You got mad employees, all of that fun stuff too. So are you seeing, I guess, yeah, to go back to, are they looking to allocate tips in box 14 as well then, that are eligible, or what's that going to look like?
So next year, they're going to separate tips into a couple different boxes. For this year, I believe the last I saw, there wasn't full guidance yet as far as we're going with that, because the problem with the tip side of it is that there's really multiple classifications. There's the classification of voluntary tips versus involuntary automatic calculated tips. And most employers aren't separating those today. And so in those scenarios, it's going to get really interesting to where employees are going to want those to be able to be reduced on their income, but employers aren't reporting it separately. And I find that's going to be the much bigger challenge than separating the overtime.
Yeah, I fear a compliance nightmare on this upcoming tax season for those tipped employees who don't have the data, their employer doesn't have the data, and then they're going to want to throw some stuff in their tax returns to get that benefit. So I mean, we can talk about that too. So that's the thing is, it's not, like I said before, it's not as simple as you're not going to get taxed on your tips or your overtime. So with the tips, one thing that Tyler referenced was that there's a different treatment between what's an automated, like an automatic gratuity, like when you have a party greater than a certain size or whatever scenario that is, versus a voluntary tip. And right now we understand that the voluntary tips are eligible for this tax treatment and not the automatic tips. And that's really just going to kind of depend on, if, like you said before, is it a homebrew system that the employer is using to calculate this stuff? Are they using a, point of sale software machine that helps track these separately? Has that point of sale software broken this out yet? It's like, ooh, it's right where we're at right now, I suppose. And 2026 is probably a little cleaner, but 25 is going to be tricky, I have to say the least.
Yes. I mean, 25, this came into play in 25. So it wasn't like you could start the year out clean, separating, reporting, and all that. 26, you can get prepared and be ready for the whole year, but 25 is going to be a mixed bag of it.
Yeah. The one thing we talked about on the episode when the bill was introduced was if this change, which I'm thinking less now that it's going to make any big impact since it's temporary, but is this change going to influence businesses on how they compensate employees or how even employees want compensated? Is this going to encourage employees to want to do more overtime? Is this going to encourage more people to enter tipped fields? And I think what I'm hearing is having a good partner in your payroll and your withholding plan is probably really important, because you're going to have employees that are really wanting to take advantage of that. That's where you're going to lose out, I think, in a very competitive market of finding employees, is if you're not helping them get the tax treatment that they really can get under the law.
You're spot on. If you're doing it right and you advertise that in looking for employees and you better educate them, at the end of the day, you're going to hire and retain better talent than if you're out there just continuing on.
Yeah, because it gets really simple. I mean, just amongst, like, if you just go contractors, blue collar work, if one gentleman's like, hey, if you come over here, I'm getting taxed way less than over there. And it's just a simple withholding thing. But it makes a difference, because the average person has no ability to understand how it all comes together in a tax return and what the risks are of under withholding and not. So being in a place where you can really educate your employees and help them take advantage of it versus, there's going to be actors in different areas that do things differently to try to maximize how much their take home pay is, and I see that as an area to be educated on for sure. And that big reason why we wanted to talk about it today. And I know you guys are probably seeing it at a much larger volume than I am,
To your point, I think it's going to be really important, though, that they picked a good payroll partner, someone who's going to be alongside with them to give them the recommendations. But not only that, but also a CPA, a tax preparer, someone who's helping them at the end of the day, so that, a lot of those employers are really good at making their pizzas or their sandwiches, and they're not always understanding exactly what these tax properties are. So to have a good team around them, I think is going to be crucial.
Absolutely. Yeah. I think there was one other thing I wanted to touch on the big, beautiful bill, but I think that's it for now. I think we've nailed that pretty good.
I mean, is there, I would say from your perspectives, I mean, some other things, maybe some considerations with that, or maybe questions that you're seeing from some of your folks that you're working with day to day?
I was actually going to ask Tyler a question a little bit because he hit on the W-4 a minute ago.
Yeah.
And in my opinion, the dust is still settling from the 2020s.
Oh gosh, sure. You started. I'm gonna get on a soapbox.
When he said, "Are they going to change it again?" I'm thinking, "No, there's no way."
Oh, so yeah, the W-4. I've this is me getting on a soapbox. But when the first Trump tax bill went into effect back 2017, they did a significant revision to the W-4, and I think that. Personally, I think that there was some emphasis on updating that W-4 to lower people's withholdings. So people felt more of an impact in their take-home pay. And across the gamut, most people were under withheld, like significant changes. And I can't help but think that that wasn't a little political because like the tax bill did lower taxes for a lot of people and most people, but that W-4 happening at the same time made people feel a little bit heavier in the pocket on paycheck time. And then they got their tax returns and were, oh, wow, I didn't realize I had to report my spouse's income this way and follow these instructions differently. So yes, I am very nervous about the W-4 because every year I still explain to people the change from the previous of claim zeros and you're fine, W-4.
Yeah, it's a very interesting thing. It's honestly, it's so complicated now.
Yeah.
So one of the things that our system does that most don't is it actually walks through the questions associated as opposed to, hey, here's this form, just fill it out and real quick be done. But it's walking through and saying, hey, do you have this scenario? If so, then we need to go into the next step and look at this worksheet or all those different items.
Absolutely. So that is a part of the employee kind of onboarding steps with the platform that you guys are using. That's really nice because I mean it just keeps coming up over and over again that people think they can just mark zeros in there and they're good, and it's not the case. So that's really handy because I've pointed people to that there's like an IRS tool for it too, but it's not user like efficient and it's confusing. So it's good to hear that you have a tool for that because it all comes back for the employers on retaining happy employees, and if they get the tax time and they owe $3,000 and they're used to getting $2,000 back. They blame payroll. They blame HR.
Right. Yeah.
Like absolutely without a doubt. So it's really nice that you guys have that. That's super helpful.
Yeah. And you're spot on that if it is anything even comes back, it goes back to the employer. Yeah. And the employer then looks bad even though they didn't do anything wrong. But how do you better educate those employees up front? How do you better talk about it all the time? I mean, just the conversations around paychecks and taxes, the more conversations we can have across the board, help better educate everyone out there.
For sure. And I think, talking about those conversations and like some things that maybe you guys might get questions on, or if you're setting up something or if folks are expanding, and I know you get this quite often, is kind of around like Ohio's rules for, where you're working and local taxes, those types of things. So Tyler, why don't you kind of talk a little bit about some things you see? And I would love to get kind of these guys' perspective on that as well, because I learned, and again, marketing guy here, right? So I'm learning all this stuff real time very much as well. But Ohio tends to have a little bit different tax laws than a lot of other states. So yeah.
It's just a complicated tax situation in Ohio amongst other states, and primarily because we have state taxes, which is a lot of states have state taxes, but we also have various forms of local taxes. One that we won't talk about a lot today is property taxes. Clearly, you pay property taxes on your real estate, but there's also local taxes for your municipalities, cities, villages, as well as school districts, and associated tax returns and tax withholdings for all of those. And it gets messy even for people who just work and live in one place or another. Like the common thing that gets people confused, especially if they're new to Ohio, is that, well, I'm paying tax where I work, but then I have a tax where I live, and I got to reconcile that out on a tax return. How does that work? When doesn't it work? What if I work from home? That is one thing. But then the area that I think we wanted to touch on today too is that if you have a mobile workforce who is working in different cities or municipalities, there's requirements to withhold taxes in those areas. It's the way I relate it to people, because then they understand it, is like you hear about sports teams where these high-paid athletes will have to pay a lot of tax where they play. It's really no different than that if you're let's say you're have a bunch of welders who are running around and doing jobs in different parts of the state. It's very comparable. So I'm assuming you guys have to deal with that quite a bit and help people through the complications of local Ohio tax.
We definitely do. And let's go to like the more simple part, and then we can get to the remote workers, right? So to your point, I do think that Ohio, probably across the nation, is the second most complicated tax code and jurisdiction between the work-in taxes, the live-in taxes that you've already gone down. But part of the piece here is that we try to simplify that, right? So when we're onboarding those employees, we already talked about the W-4, we're also taking a rooftop locator and understanding where that employee lives, so we can understand what those local taxes are, to simplify that as much as possible for those employers. So the employer is not having to make the decision or look up that tax code to understand. Myself, I live in a township. I live in a city, but I live in a township, and that exempts me from that city tax. And so it's kind of crazy. Most employees have no clue of these different things, let alone when we get into the remote workers who are working in different work locations. So we really try to make it a point to make sure that we simplify this as much as possible for those employers and the employees. Now, if you want to take the remote workers.
Oh, absolutely. This is one of my favorite topics. And it's one of my favorite topics because so many employers don't even realize they have to do it. Like your plumbing company that's only 10 years old or 5 years old and has been doing this for a while or something. They just don't fully understand what's really required. And sometimes they're doing estimations or things like that. But basically the rule of thumb, and it aligns perfectly with pro sports. Exactly. At pro sports at the state level, but this at really the local level, where as long as you're working in that municipality for 21 days or more in a year, you've got to report every allocation of hours spent by every employee across the board there in those different localities. And, if someone notices across the street that, hey, Johnny's Plumbing is here at this house, and calls to the local municipality and says, are they paying taxes to our jurisdiction here? All of a sudden an audit gets triggered. And there's phone calls being made, and you've got a nightmare on your hands.
Yeah, I'll tell you another way they catch it too is that in some municipalities, when you file your business's local tax return, they ask you for a listing of all 1099s you sent to the vendors you deal with, and they use that as a cross-reference to see if that employer withheld taxes in that city. So if you do work with a contractor here and you spend $50,000 with them and you cut them a 1099, that city is going to expect to see wage withholdings for that employer that was here. That's one other way that they can find it, and it triggers some of these audits. And I think you're right. I think sometimes the businesses have no idea until they do run into it, and then it's, oh gosh, fines, extra returns, and it's crazy. What I'm very interested in knowing is that what you guys have seen as good systems in which businesses can track this time and report that back in payroll, because I think that's the big lift is okay, we have to do this. We have to allocate these hours out. Are we doing it through our timesheets? Are there geolocation factors we can use? What can we do to make this as painless as possible?
Yeah, no, you came right there with timesheets.
Yeah.
So the more granular you can get with the data at the time of labor. So whether it's job costing and then tying out those jobs to the municipalities, that's perfect because that allows you to allocate the real hours, the real data. And then also one thing that our system does that some don't, but a lot do, is reduce those wages by the appropriate portion of tax-free deductions. So things like Section 125 medical insurance, other things like that out there that allow reductions of it. So those wage allocations can get very complex. You can find yourself in a situation where you've got 40 W-2 forms. Because you can then only also report 2 localities per W-2 form. So you could end up with a stack there that's pretty hefty.
Yeah, it's very common to see. I mean, there's probably people who watch this, they get there. Why do I have 40 W-2s? It's like every 2 pages is this different, locality. So, I mean, that's the intriguing fact, because like when I bring this up to people and their eyes get really wide because they're like, oh my gosh, how am I going to do this? But one thing that you said that kind of makes me happy is like, actual job costing. Because like that's what I'm recommending most of my clients to do anyhow, is like, let's actually job cost and get this into your P&L so you can tell how you're making money in different areas. And if we're doing timesheets properly, then we can feed that data back into the payroll. Because I'm assuming in the way that payroll's processed with you guys and how you help people is that there are probably calculations in the background that see once a time frame is hit, once it qualifies to start withholding, when it doesn't, and all those different factors. And like you said, different calculations and prorations based on pre-tax, post-tax, all that fun stuff. It's just really their core job is get the data to you.
Yes, you're spot on.
Yeah.
So long as we understand up front that we want to allocate these locals and need to, which most commonly, it's very easy to tell industry what they're doing. And you see some of these things happening. We build the structure, and then as long as they supply that job data or that data of here's what's going on, then that processes through. And to your point, once we've done that, we can just process job costing all the way through to the general ledger and allocate it into the P&L. And if you're recording localities, you might as well go to the job level. Because I've seen some employers where they basically say, oh, we just know that they're going to be in this jurisdiction today or that jurisdiction. And it's like you're 75 to 90% of the way there to getting a true job cost. You might as well go ahead and do that little bit of extra labor and get that true data to understand what your profitability is by job and really drive better business decisions as far as where you should be going, what you're doing, all those fun things.
So that we're going to really geek out on this episode prior, but you're seeing the ability with HR Butler to push reporting back out to businesses so that they can get it into their P&L based on job costing too with your platform, what type of service was done, location, all that. Love it. This is one of my favorite things to talk about. I love it too.
All right. And so you touched on something. I just want to put even a finer point on that too. So like something where maybe you don't have as much of like job costing type stuff would be like the work from home. And so, obviously, like there's a lot of folks who are working from home, a lot of employees, especially employers in the last couple of years, coming out of COVID, we're like, yeah, we kind of like this hybrid work environment or totally, 100% remote companies. Like, what has been your experience on that piece of like maybe questions that you're often getting, or maybe even some mistakes where you're like, hey guys, we got to change this now?
Yeah, I think the big thing is identifying when they're working from home. All the time it'll be, well, hold on, you're withholding taxes for this person, but you just told me they're never in the office.
Why?
Yes. Asking the why.
Yeah. So it's always about asking, it's an interview process, right? What are you doing? What are you trying to accomplish? And what are the reasons for this, right? So, and everyone always seems to, I think, err to the other side of, oh, Dublin has, or this particular municipality has a withholding and this one doesn't. I work over there, right? It's not a choice.
Well, that's why this is getting so much attention, though, because these cities are seeing missed revenue and they're fighting it.
100%.
And the compliance risk that you have in this area, I always like to tell people the smaller that the government size is that you are working with, the more likely that they're going to come find you. The federal government, they have like half their IRS employees right now. It's like the odds of anything happening with you are relatively low, but your local taxing authority will be on you in a minute. Yes, because that really drives all of their programming and their revenue as well.
Yeah.
So with the work from home folks, are you kind of having something similar to your plumbers or electricians where they're saying, oh, I work 2 days a week from home, that goes into an allocation and that helps with their withholding?
Yeah, we do that in some cases, and others, if they're 100% work from home, it's okay. Yeah, there you go. Check off the box in the system that says they're a remote worker. Let that ride. But if they're, let's say, going to and from the office, then they're either allocating by that location, or if they have a pretty set schedule, you can just say, hey, I spend 3 days here all the time, 2 days there. But you got to review that regularly because it could change.
Right.
So this is very interesting to me. And we had this conversation on the drive down here is that, and you guys will probably have a better perspective than me, but it seems like in the last probably 10 or 15 years, the ability to handle payroll really well in-house is harder and harder because of the complications that we're talking about now. So are you guys seeing that growing trend for, not only mid-sized and small businesses, but the larger businesses to be like, we need a partner that actually just does this?
And no question. No, and what I'd say is I've been doing this a long time is that, construction industry primarily, right? That's a great one to pick on in that, in a good way, in that they work all these different locations, right? And it was always done in-house. And it was always done in-house because they thought that was the only way they could job cost. And now they're spending all this extra money, all this extra work and time when these can be done inside of one system. And so we're seeing more and more of those type organizations that have always done it in-house, taking it and outsourcing it because they don't have the ability to do the things like onboarding and benefits enrollment and all these other payroll symptoms, right?
Yeah.
So we definitely are seeing a big movement there.
Well, I think that's a nice, easy transition too, to talk a little bit about benefits as well, because you guys referenced that you're kind of in the benefits space. And I'm just kind of generally curious what you guys have seen as maybe working well with some of your customers, because I think that's the hardest thing as a small to mid-sized business is being competitive in that space versus your larger competition.
And I would add to that too, and just understanding the process and what should I be asking, or what two things should be touching, and what's separate. So like, what has been kind of your experience on that? Like maybe ways you've helped, or questions you're getting, or what that process looks like.
Well, and to be honest with the benefits, it's so vast, right? There's so many things, right? And so we kind of work with employers at all different levels of, hey, we're interested in starting a benefits plan, and what does that look like? A lot of times, for someone who's starting out, it's a big step, it's a big spend for them, right?
Yep.
If they're doing traditional health insurance, which I mean, traditional being a group healthcare plan, they're responsible to pay a minimum of 50% of that employee premium. So there's newer plans, ideas out there with ICHRAs. And ICHRA is a lower level stepping entry point for that employer to be able to get into the employee benefits portion. We work with employers that are cruising down the road, they're in their employee benefits, and now how do we look at minimizing those increases or controlling those increases? And those employers aren't to a point where they're going self-funded, but we can do mini self-funding plans. And so, a lot of it in my true belief is, how are we exposing the employee? How is the employee seeing things like, what does my doctor bill really cost? How much does that medication really cost? We've been working with these copays for years and years. And so when that employee sees $25 or $30, it's not a change in my behavior of my purchasing, right? You take some of these medications like Adderall, it's a $250 medication, but the employer's been paying $25. They're not going to be motivated to make a change in that. And so we work with a lot of these plans where it's exposing the employee so that they can at least see what the cost is, and it's changing buying behaviors. And that is really where we try to see, how do we control those increases year over year? So there's a lot of things that we go work into this. We are a big believer. I think we're the largest consumer-driven healthcare broker in the area. We also believe in HRAs, which is a level of self-insurance, and we self-administer those in-house. And so we don't share in any of that savings. It's 100% employer, and we want to express that and show these employers that, what we were just talking about trend yesterday. Trend in the state, or sorry, in the nation is right around 9%. I think you're saying that there was also for fully insured was closer to 16%. And so, how do we control that? Employers can't take 16%, let alone 10% increases year after year. So to me, it's a philosophy. We work with that employer getting a buy-in, and then those employees getting buy-ins. And it's more costly to someone like us who's spending time with those employees, educating those employees, doing employee welfare visits and so forth. So there's a lot that goes into it.
Yeah, I could see that being the biggest item when it comes to benefits, because enrolling into a 401k or a simple or something like that, relatively minimal in cost, but it's always the big question of health insurance that is the budget buster, is the not only just initially paying for it, but like you're saying, it's being exposed to these increases each year.
Right.
And then, there's a lot of drama right now about what's going on the ACA side of things for folks who are getting insurance on the marketplace. And I don't think a lot of people know how significant their cost is going to go up if the subsidies get extended or don't. I know there are a lot of employers who are offering, stipends to their employees to go get ACA coverage. So I think more and more of this topic is just going to continue to drive, because even if you're not at the point where ACA plans are any cheaper realistically than going and doing a group plan, and employees are going to expect levels of benefits, and that's where it's really hard to compete. And having someone to help you, like, that's interesting, the ICHRA that you talked about, because I'm not super familiar with those. A stepping stone into such a large expense makes a lot of sense too. It's just one of those topics that I think what you hit on was really nice, was exposing employees to cost. I think one other added benefit of that is exposing employees to what their total compensation is.
Yes.
At your, be crucial.
Yes.
Because when you're looking at retaining talent, it's easy to work around and ask for $5,000 or $10,000 more a year. But when you're looking at total comp, which includes these benefits, that's where the big changes you're going to see are.
Well, and we see it from employers. Or the employer will come to us and say, "I just lost this employee for a $3,000 increase in pay," and it's Did you really? When we start to look at what was that 401k match, what was those health insurance benefits? You're paying 100% of their health insurance. Did they weigh that into consideration? Well, they don't even offer a healthcare plan over there.
Yeah.
And so they're walking away for not seeing or understanding the whole picture, right? And so we believe in total compensation statements. I mean, Tyler's preaches it. So it's something that we want to see as an automatic to any of our customers. Every one of those employees should see an annual compensation statement so that they understand, even if they don't offer the 401k and the health insurance, but they can see their PTO, they can see what the taxes are being paid and so forth. And of course, the sweeter that benefit package, then the greater that picture.
What's important about that too is not only, your competition with other employers, is that we're in very much a gig economy too. And people look at like, well, I could just go out and do my own thing on a contract rate for $50 an hour and I'll be making way more. Seeing total comp breakdown in an hourly, really, we've had this conversation with folks all the time who've become out in their own business on their own, everything. Could be a 1099. A lot more per hour than you realize to cover all of this, because it definitely adds up when you look at what you're in total getting from your employer, including the, like you said, the kind of the intangibles like PTO.
Yeah, it's mind-boggling, and the increases that are coming in across the health insurance space. So Trent started to hit on it there with the percentages we're seeing. This year is projecting to be the highest increase in the last 25 years. And so if you look at that and say that's continuing on top of the inflation issues we had over the last few years, that's impossible to get up to, really. So how do you start getting creative with what you look at things, whether it's custom prescription plans? Prescriptions are the highest percentage of it. So how can you make that consumer driven? And then beyond that, I was actually going to ask Grant a question here.
Yeah.
Being the marketing guy that doesn't maybe know a ton of this, what percentage or what annual cost do you think the average really is when it comes to a benefits package for an employee?
Of what it goes up each year, you mean?
No,
Like, or just total
cash value on average for an employee.
Oh gosh, I couldn't even tell you. I couldn't even tell you where to start.
It's $20,000 to $30,000.
Yeah.
And people don't always realize that, because you have employer taxes as well. You have all these little benefits that go into it. We talk health insurance, but then you start talking disability insurance, group term life insurance. All these things add up. And so how do you educate your team members on this as well? The better the employees know about it, the more they use it, which in some cases is fantastic because it helps benefit everything across the board, better healthy lifestyles, everything out there. So how do you get that in front of them and deliver it through both, materials like marketing materials really internally.
Yeah. Sure.
And then also through a system that allows them easy access to these things. Because all the time it's, well, I didn't even know that was a thing. Well, how do we create dashboards and interactive things that make this so that it's very easy to get into and see and use?
Right. And I think where I've heard before, we've had multiple conversations with multiple people too, of like, the more things you can do to proactively keep yourself healthy, and do those small, what I would call low-hanging fruit things, minimizes your, potentially premiums and other things going up for stuff too.
Oh yeah. I mean,
there's wellness programs and other things like
that. We've had conversations with folks who run direct primary care programs trying to do the same thing, drive down the cost that gets passed to the insurance, which affects your group's, usage, and, there's a lot there. I think that's one thing I want anybody watching this to take from this episode, though, is if you don't know your numbers, ask your accountant or whoever, but start putting together total compensation for your employees and really showing that, because they are probably actively looking at their alternatives.
Yes.
And the more they know about, especially if you're providing those ancillary benefits, that's going to help you remain more competitive and trigger their mind to look at that and not see, oh, it's extra $2 an hour down the street. It's not the whole picture,
right? 100%.
Well, and even start to include things like, hey, we provide lunch 3 days a week. It's those little things that add up a ton.
Yeah.
And if you have a good payroll partner, these things are very easily tracked, right? It's all being tracked in payroll. We should be able to flip a switch. It's a free report, and we encourage all of our employers, right? That's a standard thing that we push out to all of our clients. So definitely something that's easily said and done.
Yes.
They're spent. Well, we've covered quite a bit in about 45 minutes or so here. I first of all, thank you guys for jumping on. This has been awesome. I'm the marketing guy over here, so sometimes you get in the weeds. I'm like, oh, this is interesting. I'm over taking my own notes.
Hopefully we didn't lose anybody. I'm like, no, people found it interesting. It was no. Trust me, I would have jumped in and be like, guys, I want to talk about.
No, this is great. Like, we cover a lot today. Like, right? Like, we talked about some things coming out of with taxes and tips and what's happening with the, tax bills going through. Covered a lot about just different things to consider when reporting wages and the different types of industries you're in, whether you've got maybe a blue collar workforce that's out doing the trades or whether you've got folks that are working remote. So a lot of really good stuff coming out of there. And then just as a general conversation around benefits, I always think is fascinating because I feel like that's something like I've always tried to educate myself on. And like, I find myself like, oh yeah, okay, I learned it. And then, oh, it changed. Or, oh, here's something else to consider. So, I really appreciate that conversation around, showing total compensation and stuff. I think that is very key because everybody is always looking for good people and how do you retain good people? So yeah, anything else to add on? Otherwise, I think, feeling pretty good. And again, thank you guys.
Yeah, I think the moral of the story is, and we say this all the time, but it's like find the right people to put in your corner to talk about this stuff.
Yeah.
Because it's not just getting payroll ran. Like it's not that anymore. It's so much more than that.
Yep.
And having people who can actually guide you through these processes. I try to recommend as much as I can to stay away from like the big giant, like, we can put them on bus, like the QuickBooks payroll, right? Like you jump on there, it's like you're on your own. Like it makes sense when you're small, like and you're getting there, but like you gotta at some point get people involved that you can have a conversation with and step through a lot of these issues. And we went through how many different sticky, weird ones today that you would just be on your own trying to figure out.
Mm-hmm. Yeah.
You're spot on. Most people don't fully understand the depth of it. You look at, I haven't had these in-depth conversations with other people that know the assets or the aspects of them other than CPAs and payroll people, the full depth of them. A lot of people know the surface level conversations, but diving deeper, understanding that. And at the end of the day, most employers, it takes hours and hours, if not days and years to understand this stuff. So by finding someone that can just give you those answers really quickly and ask the right questions and point you in the right direction, it really helps you continue to focus on what you do best.
100%. Well, thank you guys. And I know we didn't lose anybody on this episode. So thank you all for watching, and until next time.
Awesome.
Thanks.
See you later.
Thank you.
Thank you guys.
Thanks for tuning in to the Next Gen Strategies podcast, where we share real stories and practical strategies to help you grow your business. If you enjoyed today's episode, be sure to follow us wherever you get your podcasts, and don't forget to like and share it on all of our social media channels.